low end, the medium end, and the high end. The low end is not crashing. Those prices are basically normalizing. And those low end prices are also protected by cap rate. So when you have a low end house, the value will always be there based on rent, if nothing else. So it's pretty hard for the low end house to come crashing down. And then the medium market house, if it's trying to crash down, it's only going to go, it can't push that lower market lower because that lower market again is based on a cap rate, if nothing else. So it's that medium market, sure, it's going to correct itself, but it can only go so low. Then you get to the higher market, and that's where all the problems are. These 3, 4, 5, $6 million homes. That to me, that's where the crashing is happening. And so I always look at them in the three different market places. Yeah, but just like your first slide, a house that should sell for a lot is they're just trying to recoup what they basically paid for it in 18. So yeah, I don't know if it's a crash. I mean, if you start adding in the condo market, that's a whole different animal. That certainly has a lot of negativity, and the word crash is more applicable to that market. But overall, I think the lower market, the medium market, they're it's just kind of normalizing the prices where it should be, just like the interest rates. They went up, they went down. They're kind of at where they should be. And that's the way I kind of look at the housing market. And I think those higher priced homes, I mean, they were just too expensive. People were paying for it, but they were just too outrageous as far as price per square foot. So that's my take on that.
Yeah,
I
Rosman?
I
would
think
I would agree with Jerry and Doug as well that I don't think we're in a crash situation yet. Um, and as Jerry was saying too, that the numbers are affected in Calgary by the townhouse and condo market. We have so much new inventory in new communities that is coming on the market. We have probably 4 or 6 months or whatever of inventory of condos. It's difficult to sell the older stuff. The newer stuff is selling okay, but the rest of the market seems to be holding its own and fairly steady. It's not going up in great amounts, but it's kind of leveled off and it's doing okay. With that said, too, about townhouses, I live in a townhouse market, and my neighbor on one side of me took him 3 months to sell, and he got desperate and greatly reduced the price to sell it. And then conversely, just down the block, one of the guys put it up for sale in 2 days and sold at record high price here in 2 days. So it was just bizarre how that happened. But so I don't see a crash, especially in my area at this time.
Okay.
I
We're
think
definitely,
I
we're
think
definitely
this is a
talking to,
long, sorry, go
go ahead.
ahead.
No, just go ahead,
Yeah,
please.
I think this is the longest duration of crash that has come about in recent times. And for the last 2 years, we just keep on hearing about prices going down, home prices dropping, crashing. But at some point, it has to stop going down because people who have not got into the market because of the crash to sell, they need to sell at some point of time. And things will probably stabilize uh, because the interest rates are stable and the house prices also have to stabilize at some point of time, maybe next year. So it is a crash that we have not seen before, but it has to come to a stop at some point of time. And people need to buy, they need to sell. There are condos in the market, which, although the purchasers don't want to close them, they're being forced to close. Occupancy closings are there, final closings are there. So somewhere the balance has to be maintained.
All right. We're going to move on to the next part of this conversation tonight. So those who do not believe the market have crashed, it has corrected, here are the hardcore facts. The market have dropped by 23.5%. Yes, these are the corrections from the past. These are the fact-based, are the opinion-based. So this is all more or less covering all across Canada, though. Just thought I should share with you. Airbnb is gone down. I'm talking about the stock itself and what is happening with Airbnb, especially in Canada. Ever since they have put down the foot down, you can't do it anymore. And it has opened up a lot of supply, a lot of rentals becomes more available, and the rents all across Canada are dropping by 10, 15%. Majority of the corporate lenders, corporate owners in GTA offering 2 months free if you sign 2 year lease. But again, those who have Airbnb accept certain part of the real estate. Airbnb have been more or less shut down. Just thought I'd just share with you. So just to let you know that we have been in touch and we have been involved always with the Habitat of Canada. Those who are in GTA, if you like to, if you have some time, you like to volunteer, you like to build, or you want to utilize the reuse store, please do so. We will definitely gonna have somebody from Canada, uh, Habitat of Canada from Canada as well as from GTA. And the person you can contact in Toronto is Michael Fraser. I met him a couple of times, and they are looking uh, for investors like us. We can utilize your time how to build the house. It's a great noble cause, in my opinion. You can work or pick up the stuff from reuse store, and the reuse day opportunities are out there. And those who are interested in habitat.gta.ca is the website. He's supposed to be here tonight, but I guess it's last minute thing. Just thought I'd just share with you. So we need to also give back to the community, especially Habitat for Humanity. I think this is a great cause, by the way. So tonight we're gonna have a real estate lawyer, Jyoti Chaudhary. She's the lawyer from India. She have degree from UK and also a degree from Canada. She's one of the top-notch lawyer in Canada. And it's all yours, Jyoti, tonight.
Thank you, Navtaj, for the introduction. And I always like the starts that you give to the webinar. Very positive, very encouraging. That is a great thing that you do. Today, I will be speaking on two things. One is the difference between legal ownership and beneficial ownership. Now, most of the time, the legal owners are also the beneficial owners. They are probably the same people. They are on title and they are also the beneficial owners in the sense that they will partake or they will have the benefits of rent or cash flow, whatever else. But sometimes it may happen that the legal owner is different and the beneficial owner could be different. Sometimes what happens is when people are having a hard time getting a mortgage, they put somebody on title, maybe for a 1% or 10%, just to get approved for the mortgage. In that scenario, then there is a trust agreement that we draw up saying that so and so is on title, but he's on title and he's only a bare trustee. The benefits or the beneficiaries are different. So basically, legal ownership is when your name is on title and you're the owner as per the land titles office. Whereas beneficial ownership could be different, could be the same, but if there's a trust agreement, somebody's got on title, or the parents have made the children the beneficiaries, that's a totally different ball game. So basically, there are two different things. Legal ownership is when you're on title and you search the land titles office records, your name is there as the owner. Beneficial ownership is when you're not entitled, but you are entitled to benefits of the property, meaning the rents or the finances or the proceeds of the sale and things like that, and to live in it as well. So that's the basic difference between legal ownership and beneficial ownership, although they can be the same people most of the time. Now, the second point that I would like to talk about is about landlords, what they cannot do under the Residential Tenancies Act. I think most of you have a very good idea because almost everybody is either a landlord or a tenant. You can, most of the people either rent, or if you have bought investment property, you're a landlord and you know the rules pretty well. So basically, if you're a landlord, you cannot change the locks in an arbitrary fashion. You cannot increase rent above the guidelines. You cannot evict anybody, without uh, the proper notice and due process. So basically, you have to abide by the Residential Tenancies Act, and you cannot evict illegally. If somebody is not paying the rent, if there are areas, then you will go to the landlord tenant. First of all, you have to tell them to bring it up to speed. So you serve them with an N4 and you tell them to bring their areas up to date, pay off their areas. If they do, then you're not entitled to terminate him. But if they don't, you have a valid reason for applying to the landlord tenant board for evicting him. As everybody knows, the LTB is not the fastest in terms of the procedure or the eviction orders. So it takes a long time, probably about 6 to 8 months before you can get an eviction order, and then the sheriff steps in and things like that. So lots of things that landlords cannot do. They cannot visit the property without giving 24 hours notice. They have to give notice to the tenants that they're going to visit the property. And for a just cause to show the property, or basically if there are some repairs which are needed, then you're going to view the property. But you just cannot invade the privacy of the tenant. So these are a few of the things that um, landlords cannot do under the Residential Tenancies Act. Most of you are aware of that. And that's my take for today.
All right. Thank you so much, Jyoti. Appreciate it once again,
You're very
Jyoti.
welcome.
And now we are going to bring
I have,
one of
a,
the
I have a
special.
question. I have a
Yes.
question if she's available for a question.
Yeah,
Sure.
sure.
Are you talking about the rule there, or those two rules for mostly Ontario, or are you talking about that for Canada?
Ontario.
Okay, thank you.
All
You're
right.
welcome.
Now we're going to introduce our next guest, Doug Thompson, my new friend. I should say friend. He is a trainer, actually, but believe it or not, he is the master of sales. Whether we like it or not, we all sell, we all negotiate. And I just thought I'm going to bring Doug Thompson. He is a well-known authority when it comes to sales. Was the past president of Ward Wickman. Some of you, if you're a realtor, know of him. You might have attended one of his training. He is the powerhouse. He's been around for a very long time. Doug, it's all yours tonight, my friend.
Well, thank you for that great introduction there, Nav. You're doing well at these introductions. So, as real estate agents, I see that Shelley, are you a real estate agent?
No, no, I'm not an agent. I used to be a broker and I work with a broker team to do private lending, and I'm a land developer. And I'm
Okay.
also a real estate coach and trainer. I train wholesale, whole variety of other courses and stuff like that too.
Okay, fantastic. I just was reading your sign behind you there. That's what made me
Oh.
anticipate or guess that might be true.
Yeah.
Okay, so as far as the real estate training goes, that's not really for this group. I don't think at this moment, but for myself, I bought and sold and invested and flipped over 200 houses and commercial properties. So I'm very versed in what you guys are talking about today. It's a great pleasure to be part of this group. Nav asked me to just throw out a couple things as to what made me be able to do what I've done over the years. And, I think that there's a very rich guy from Nebraska that has a very good desire to point things out. When it comes to being successful in a business, one of the most important things that we have to look at is focus. And says Warren Buffett, and I couldn't agree with him more, that if we're not focused, what's the chance of us succeeding? Not very good. So we have to do that. We have to also be disciplined in our day to day as to what we're doing, whether we're looking at our investment properties. I had 44 doors at one time. And so to be able to have those, you have to be very disciplined as to what's going on with each individual property, how you're handling each individual property, how the tenants are being looked after, as you were so nicely and graciously pointed out for us. Of course, the rules change slightly as you go across the country. I was in Alberta when I had all my houses. And so there's lots of that as far as the discipline goes for you to be able to accomplish to get to the level that you want to get to in the investment and commercial side of things. As far as for a real estate agent goes, is what I started with, because as a real estate agent, we work hard to sell houses, but the real way to make a lot of money is to own houses or to own commercial properties, as we may know already. Last but not least with that is also then our time. How do we control our time? There's lots of different things that we can look at. There's lots of different ideas and investments that we can go into, because at this level in our age group, as when we're here, the majority of us have the ability to be able to realize that time is the key. And there's always somebody trying to steal our time. There's always somebody trying to ask us to go do this or try this or whatever. And so at the end of the day, you have to be willing to say no more than you say yes if you want to be successful in the real estate industry as a whole. At least that's been my experience as you go forward. So overall, I just like to say thanks to Nav for giving us a chance to be here and to just throw out a couple different little ideas as far as what has helped me over the years to be a real estate coach and to be very successful in the real estate industry. Just to sort of tell you a little bit about it, I was number one in Canada for Century 21, averaged over 100 closings a year myself without an assistant for 10 consecutive years. So I've sold a lot of real estate, done a lot of deals. So I have a lot of knowledge to share, and it'd be fun to continue to share some of that knowledge in this group. So thanks, Nav, for giving me an opportunity to be here.
Excellent, Doug. Thank you so much. Really appreciate it. Now, here we go. One of the worst fear we have: who's robbing most of your money, where this money is going, and how much do we really owe? Well, about $40,000. Now, one of the fact we always talk about is, hey, do we owe money? Where does money goes? And my God, where do you go? Come on. Okay, now we're talking about taxes. Now, all right, my God, what is this going on here? So we're gonna be talking tonight with the help of our specialist, Jerry Hogenhout, how to pay a lot less tax, especially when it comes to capital gains, as well as some other topics. Jerry, are you there, my friend?
I am. I'm here. Can you hear me?
We can hear you loud and clear, my friend.
Awesome. Okay. Well, I second everyone else now. Thank you for doing what you do here. Thanks for the introduction, and just always great to share information with your audience. So I appreciate the opportunity to be here. Before I get going on saving taxes, I just want to kind of uh, talk about what Yoshi talked about too, as far as beneficial ownership and legal ownership, because that has implications in the tax world. So, beneficial ownership means that you're not on title, but you have an interest in that property. And here's a very simple example to explain a point. Let's say the property is registered in person A, but person B has put all of the money into that property, but they're not on title. From a tax perspective, CRA wants the person who has they want to tax the income from the person who's put the money in it. So in this example I've just explained, where person B puts all the money into a house that's untitled to person A, CRA would want person B to be reporting that income because they are the beneficial owner. They put the money up. And that's another very important point. And I'm glad Yoshi spoke about it, because it's a point I highlight a lot when I speak, when I do presentations, is the separation between the ownership of the property and the income flow from that property. And in our world as accountants, we deal with financial statements, we deal with balance sheets, and we deal with income statements. And that is applicable to everyone's life. Everyone has balance sheets, everyone has income statements. The balance sheet basically is the asset and the liability, whereas the income statement is the income and expenses. Um, so, from a tax perspective, to me, it's always important when I look at deals, where do we want the ownership of the property? There's really three entities that we deal with: a person, a corporation, and a trust. A person can own a property, a corporation can own a property, a trust cannot own a property. It can hold a property in trust for a person or a corporation. So the one thing we always look at is, where do we want the ownership of the property? And that's a topic on its own. And the second part of the equation is, where do we want the income to flow? And in a lot of cases, it's not to the entity that owns the property. So we have to separate that. I know part of what you wanted me to talk about was joint ventures. I love joint ventures because a joint venture, in very simple point, is an agreement. Okay, it's just an agreement where we agree, whoever's going to put money into the project, whoever's going to own the project, but a joint venture will outline all that, but it will also outline the distribution of income and the characterization of that income. Okay. In my tax world, everything I do is kind of, the goal is to pay, well, zero tax, but if we can't pay zero tax, 12%. Okay. As I've said many times before, a corporation, their active income tax rate is 12%. So everything I do is kind of geared around that income flowing into a corporation as active income so we can pay the 12%. I'll pay 12% all day long. I don't want to pay 20%. I don't want to pay 30. I'm certainly not going to pay them 40, and no way in the world am I paying them 50%. So everything I do is geared toward that 12% mark. And when we talk about ownership, beneficial ownership, legal ownership, we have choices, we have options, we can manipulate, we can decide where that income should go. When income gets flowed into a corporation, when we take it out of the corporation, we have to characterize it. I always call it that you put a label on that income. We call it whatever it is. Is it a management bonus, a management fee, a shareholder repayment, a shareholder loan, a tax-free allowance? Is it a dividend? There's all these things that we can do to make sure we target that 12% corporate tax rate and only that. So, as far as saving taxes, again, the ultimate goal would be zero tax, but when we can't do that, again, in my world, uh, we'll pay 12% all day long. That we have to make a contribution to our system. But the problem is the system takes way too much money out of us. And that 12% is only applicable up to $500,000. So most of us don't make $500,000. But if you did, you only get that 12% up to the 500,000. Anything over and above that, you're going to pay tax at 26%. And that's not even bad if you've made $500,000. So that's my comment for tonight. Happy to answer any questions that anybody might have. And then once again, thanks, Nav, for the opportunity to speak.
Thanks, Jerry. Appreciate it. Now we have our next guest, which she is on. My sister, Randy. Randy is in Australia, so she won't be in, but I'm gonna be filling in a little bit for her. What is happening in resale market in last 3 years, since it's been 2022 onward? The sales are down all across, but if you look at it with the facts and numbers, you'll be surprised that there are certain areas where the market is pretty good actually, especially in Maritimes. And the Nova Scotia market is great. Quebec is doing good. Alberta is doing okay or much better, but the things start cracking up as well. So based upon all the facts, I'd like to share some information for you. July was one of the best months in Toronto for sales. They have 6,000 sales, but they have 1,000 listings, the highest number of listings we ever had. And the prices did drop by maybe, I think, 5% or something along the line, but the prices did drop slightly here. So this is the scenario in Toronto, but the good thing is you can pick it up, a lot less competition, lower prices, more negotiation power. People are putting escape clause. They're saying, hey, listen, give me 120 days. If I can't sell my home, I'm not going to buy a home. We never heard that before. All the clauses are coming back, inspection, 10 days, 15 days for financing, whatever. But this is how the market dictates. The sellers don't have much negotiation power comparatively, though. So if you look at in GTA, people are underbidding. 95% of the properties sold are underbidding. Only 1% went above, 4% went more or less even. So that more or less give you a bit of an idea what happened to Toronto real estate market in last month. Some areas have gone down dramatically, about $1 million less. Which area are they? If you look at it, for example, in Huttonville in Brampton, the property was sold for 1.7. Now they're selling for 825. They lost over $1 million in the area. So there are some dramatic areas which more or less you can say in Ontario, specifically in Brampton, Pickering, even some part of Mississauga, Oshawa. And this is where property have dropped somewhere from 40 to 53% of its highest value of February 2022. These are fact-based. This is the peak, and this is what happened when the real estate people just go crazy on it. So here is more or less, you can say, if you look at the prices from last 10 years in Toronto area, hey, where was the highest appreciation? Where was the depreciation when the market stalled? When we look at the facts, it intends to give us a much, much better figure that, hey, there was a boom in 2016 and 2017 before the COVID arise. During the COVID, we did okay. So these are facts, and I'll be sharing this slides with you. You will be getting a recording as well if you like. Calgary. People think that Calgary is super hot. But look at all the facts now. If you look at the facts very clearly, yes, Calgary was super hot during the COVID, but the hype is there. Everybody's moving to Alberta. Yes, a number of things are happening, but shockingly, a lot of foreclosures in Alberta, especially in Calgary area. I'll be sharing with you the facts and figures though. Power sale in Ontario. These are the clean home prices, by the way, all across Canada. 2022 was the peak time. Just thought you should know. These are power sales. Are they going up? This is province of Ontario, mostly in Toronto. If you notice the number of properties which banks have taken over or the lenders have taken over, and they are trying to get rid of them, they're not selling as fast as a lot of people think. Even though it is a bank sale or sale by the lender, it is there though. So I'd like to share some of the other information with you tonight, if I could. Before we bring it in, some other stuff, I'd like to bring David Grossman. People talk about more interest rate. Okay, here is something I'd like to share before. David, are you there?
Yes, hi, I'm here.
Okay, just give me 1 second before I go.
Sure.
Those who want to know what interest rates are other way around, you know what the interest rate in Turkey is? 50%. Argentina 60%. Zimbabwe is 130%. Iran is 20%. Egypt is 27.5%. So what are we complaining about when we are 2.75%? If we compare over to US is 5.5, Eurozone is 4.5, Canada is what, 5%? So it gives a little relief, just to share with you. And what is the inflation? What are we talking about in Canada? What is the word inflation? 2.9%? Talk about Venezuela, which is 400%. Argentina, 276%. Lebanon is 200%. Syria, 150%. Sometimes, we have to give yourself a little tap. Hey, things are not as bad as we think they are when we compare to the rest of the world as well. Just thought I should share with you. And we're going to be talking about where are the rates are heading. David, it's all yours, my friend.
Thanks, Navtaj. Yeah, I think some of those crazy numbers kind of ties back to your original question about whether we're seeing a crash. And, people are all around the world look to own real estate in Canada because it is relatively stable compared to some of the other countries. Um, and some of the other options for internationals in terms of where they can put their money. I'll talk about mortgage rates. You also wanted to know something about why it's crucial to pay your mortgage on time. Was that something you wanted
Yes,
me to touch on as well?
absolutely. Yes,
Okay,
there are two things I want
sure.
to talk about it.
Okay, so first of all, with respect to rates, they've been relatively stable. I think arguably we're in a kind of a stagflation right now where the economy is not really expanding, but there is a threat of inflation. Inflation is going up a tiny bit. Again, not crazy, and rates are relatively stable. We haven't seen many decreases in the prime rate lately. We're thinking there could still be a couple of decreases this year, probably one at least, maybe two. Um, and so, but if you look at the average 5-year fixed rate over the last 25 or 30 years, it was in the high fours. So the fact that you can get a 5-year fixed rate now for around 4%, sometimes a little higher, is pretty good, relatively speaking. So rates are decent. Now, when it comes to paying the mortgage, in some of your marketing, I noticed, why is it very important? Well, first of all, institutional lenders, they will report to the credit bureau when you're more than 30 days late, and banks and other institutional lenders, they hate it when you miss a payment. I remember early on in my mortgage career, I had a mortgage application out to CIBC. I was still learning the business, and the loan to value of this particular application was just around 30%. So there was just so much equity, and they declined the deal. And I said, I don't get it. Explain it to me. And the guy said simply, we don't want to chase people. So that's their business model. So missing mortgage payments with an institutional lender is deadly. Especially now, they haven't always reported on the bureau, but if you're more than 30 days late, they will report it, and that's something that institutional lenders won't tolerate. Um, with respect from a lender standpoint, let's say you're a private lender, you can't immediately boot somebody out of a property for one missed payment. There's a process that you need to follow, and it does take a little bit of time. But it's the reporting on the credit bureau if you have an institutional a mortgage, or if you want institutional money, that's what will kill you. And nowadays, recently, Equitable Bank was reaching out to clients who had perfect repayment history, and they were reaching out to clients and saying, "We want you to on renewal. We're expecting you, or even before renewal, we want to requalify you right now, either because of the type of business that they were in, and if the people didn't meet the bank's criteria at renewal time, they would not renew the mortgage." So that's rare, because normally, if you make all payments on time, normally institutional lenders will just renew and they won't ask you for proof of income and all that kind of thing. But it did happen recently with some Equitable Bank clients. So not much you can do about that, but definitely making every effort to make your mortgage payment on time is something that that you can make as a priority if you find yourself short. Some lenders have miss a payment feature where you can skip a payment. But certainly, if you're having trouble, give them a call and talk to them and work something out. And that's basically my story for today. If there's any questions, I'll be happy to address them.
All right. Thank you, David. Appreciate it.
Thank
Once again, David Grossman. He is the gentleman, rockyourmortgage.ca. Feel free to call him up. He is one of the most respectable, I would say the best of the best mortgage broker, especially in Ontario. So deal with
Thanks,
him directly,
Navtaj.
and we'll be happy to.
Thank you. And thanks for all you do, Navtaj. I'll
All right,
echo
sir.
other people's sentiments. Great program you have here
Appreciate it.
monthly.
Ken Chung, I don't believe he's here. I don't believe he is here altogether. And we are supposed to have Sean Allen. He's gonna be looking for a space as a Toronto councillor in one of the seats in Scarborough to meet him once for a breakfast. And I'm not sure if he's able to make it tonight, but he has a special mission. I just thought I should share with you. We also have a lovely lady, a sister from another mother I call, Shally Hagan. I believe she was supposed to be traveling, but she's able to make it tonight. Shally Hagan, go big or go home. Shally, are you there?
Yes.
All
Hello,
right. Good to see
Navtaj.
you, my friend. Good to see you.
Yeah, it's good to see you too, my friend. Very good to see you.
So what would you like to share tonight?
Well, with I do a lot of private lending, and a lot of people have some challenges getting financing to do different things. And so keep it in mind, it does suit a certain niche. Certainly, David is also a mortgage broker, but I'm not a broker, but I do focus on lending out my own money and help other people lend out theirs through a broker partner that I have. And so if anyone's looking for some money, especially in Western Canada, by all means get in touch and let me know. And even David, if you need some funds for one of your mortgage broker clients, just let me know. It does suit a niche. It's not intended to be there as a long term, but if you need something for fix and flip or for, an acquisition, you want to do a burst strategy or something, it does fit there. I am finding that people are still fairly optimistic here in our market regarding real estate transactions, pretty active. I have several friends that are, realtors, try to keep a pulse on what's happening. There just seems to be a lot of activity, even though sales are down a little bit. It's mostly in that condo market that are down. Single family homes seem to still be moving. Is there anything in particular you wanted me to chat about?
Not really. I'm going to talk to you about a couple of properties which got recently foreclosed in the Calgary area.
Right.
And I would like to have some feedback from you. They are in certain different areas. Some are in Calgary. And there are some properties which have no appreciation for the last 15 to 16 years. And these are certain pockets in every city where you'll find that certain pockets do not appreciate because these are not the most desirable area. So when we talk about Calgary, it does not mean all Calgary. There are some pockets which intend to do very well. Other pockets intend to do not that great. All right, I'm gonna bear with me. I'm gonna bring those things in. I'm gonna talk slightly about what happens in Ontario when people lose half of the money, $2 million, $2.5 million. A property, a 14-acre lot, nice house, bought for 4.4 million not too long ago. And guess what they sold for? It's bought in 24, sold in 25, more or less a year in and out, lost half the money. If you're not careful, what you are comparing with, what is upsetting is. Now, I know that there are some people who bought the properties hoping that for purpose of rezoning or so on, but this is a big one. And this happened to you. This is a piece of property in Oshawa where they lost over $650,000. Wow. A brutal wake-up call, $640,000 loss. Here's the address, here's the phone numbers, what the date they bought. They bought at the peak on February 15th of 2012. They just sold last month, a couple of months ago, May. And this happens here. Now, in Kitchener, $585,000 loss. Property bought in March 2022. Again, the timing. There's a humongous loss people can't afford to. Even the owner tried to sell the property, tried to put it for $1, hoping to create some stuff. Nothing happened. Now, here is something in Waterloo, 30% gone. Paid 1.3, now selling for 915,000. I'm sorry, this is a good chunk of losses. The reason I want to share with you, because these people who have bought it are unable to renew the mortgage or unable to make a mortgage payment. That's the real stuff, unfortunately. Now, here is something, Shelly, I want your feedback. Welcome to Calgary, forever recovering. Why people say something like that? Okay.
Well, Calgary is notorious for having our peaks and valleys because of oil and gas.
Absolutely, you're right.
So that's probably part related to that. However, we are trying to work to stabilize that so that we're not so dependent on that.
Okay, so here's the deal in Calgary. This
Okay.
no, this is not Calgary.
And High River.
High River, sorry, yeah. And no appreciation in the last 17 years.
Yes. Well, High River went through a bit of a hit because of the flood in 2013.
Yes.
And a lot of people were hesitant to get back in there. And
Isn't it?
so it was very stifled, any
Yeah.
development there for quite some time. And it is a little bit further out for commuting to
Right.
Calgary than Okotoks or Cochrane or Airdrie. So it is a bedroom community. There are some, employers there, but a lot of people work in Okotoks or on the south end of Calgary and drive back and forth. It's a nice community,
Yeah.
but
Is High River
it
known
is,
for Alberta beef?
I beg your pardon?
Is High River known for Alberta beef as well? A lot of slaughterhouses there, I believe.
Yes, there's some slaughterhouses around that area.
Yeah.
That's
Yes,
more
it's
Tabor,
very,
though. Tabor
pardon?
is the big slaughterhouses.
Tabor
Yeah,
and
Tabor.
Brooks. There's a huge
Yeah,
one in
Tabor
Brooks.
Yes.
the big
Yeah.
slaughterhouses.
Tabor is a lot of potatoes and corn and very agricultural driven in that area. But
Okay.
huge, feedlots and things like that in the south part of the country, and a lot of not that far from there is some very big facilities for chicken and eggs as well.
I understand the inventory is a bit high. I do believe we have Ernie Gardy on line here tonight. He is a realtor, one of the top-notch realtor in Calgary. Ernie, are you there? Ernie Gardy. I've known this young man since 2005 or 6, known for about 20 years. Incredible realtor. Anyway, here's another one. This is a house, I believe, in Calgary, 2-year-old. Sold for about a loss of $60,000. That's in
Right.
Northwest Calgary.
So Northwest paid $847. It's interesting. $60,000 Amherst Way. That's one of the newer communities.
Yeah.
Not sure what's going on. Something obviously happened with the family too.
Yes, I believe a lot of people have bought it, and when they come to renew the mortgage, I do believe majority of these cases have a lot to do with interest rates, though, affordability, though. And there's another one I'd like to share before we.
Right.
Another one here.
I mean, overall, there's not that many foreclosures in Calgary traditionally. We do go through peaks and valleys, but it's not a huge amount, less than 0.5%.
Yeah.
For
Here's
sure.
another one in Northwest, which is in High River. Bill home. got repossessed recently.
High
And
River, the house was worth 1.1 million.
it's in Northwest. No, it's in
Oh,
Northwestern Calgary.
okay.
But it's
So, I
another,
mean, again, there's probably some issue that happened with the people going out of business, possibly going
yes,
through divorce, something to that effect. That area is a very desirable neighborhood. It's very close to the hospital.
right.
Those old houses are being ripped down there all the time. Like the whole, there's some streets that are almost completely redeveloped, and this is half a duplex for um, like a semi-detached home for 1.1 million, which is not uncommon in that area. So a lot of people work in, like a lot of the doctors and medical employees work and live in that area because the
Mhm.
hospital is right up on top of the hill there. So they must have gotten some financial difficulty. That's not very common for that neighborhood.
We got a
Those
lot of,
houses usually sell very quickly.
in last month of July, in last, but let's say, but last 45 days, we got more inquiries coming from Alberta than Ontario, people who are facing foreclosures.
Really
And
interesting.
surprising surprise, I would say good 30% who are from Edmonton, Red Deer, and then half of it from our Calgary area, not Calgary itself, but around Calgary area itself, though. I
Right.
believe a lot of people have moved in hoping that everything gonna be hunky-dory there, but I find people are finding it a bit tough as well in Calgary as well when they move.
hmm
Maybe it is
We've had
happening.
we've had a lot of inward migration over the last 2 years, actually, since COVID. A lot of
Okay.
people have moved here.
And the one final
There's
one, the Strathmore.
okay. Strathmore is a very stable market typically. Um, Interesting what happened there. That's a little older home in Strathmore. Strathmore is quite a way, well, from where I live. It's about an hour.
Right.
From the east side of town, it's quick and easy. There's a few plants and things like that around that area that are oil and gas related that people work in and commute. It's a bedroom community. A lot of retirees move to Strathmore off the farm because they don't want to live in the city. There's a hospital in Strathmore. So there's a lot of retired farmers and people from the city that move out there to retire. It's cheaper, price point typically. So I would assume that these people got in some trouble with work, maybe going through a divorce or something to that effect. Again, it's not, it's an older neighborhood, that particular neighborhood. I've done some fix and flips out in Strathmore. It's a slower market. They don't
Yes.
move as fast as they do in the city, for sure.
Well, Strathmore, they bought the house 10 years ago and they end up losing about 115,000. That
Mhm.
doesn't sound that well. But again, these
Yes.
are the calls and information we received from last 40, 45 days. And a lot of them, we don't deal with a lot of condos. We try to avoid townhouses. But just thought I should
Mhm.
just get your feedback on this one as well. All right,
Yeah,
we're going to move
there's
forward.
interesting. Okay.
Okay, well, what, move it. So bought a condo in 2020. This is what's happening. One of the hottest market where the condos are hot. Number one is Halifax. Second come the Quebec City, Montreal, Saskatoon, and Calgary is somewhere. But again, if you look at the chart very carefully, Toronto is at the right at the bottom of it, above Edmonton, above Ottawa, and above even Vancouver is much better than Toronto. Interesting. So this is what the appreciations are. Some areas, as I said, Halifax, the property has gone up substantially, and Halifax is pretty so-called red hot. We talked about from 2020, last 5 years. Just thought I'd share it with you tonight. So Airbnb, okay. Uh, this is Burlington. A lot of big time trouble coming up there. And now they have changed the laws about Airbnb, and I hope they can provoke it. Otherwise, a lot of so-called investors who are running the short-term rental are going to be in deep, deep water. So this is more or less coming all across the Burlington, Hamilton area. Some of you might be aware of it though. Okay, so we're going to wrap it up here tonight. If you have anybody got a question, please feel free to ask. I want to sincerely thank Shally Hagan, Doug Thompson, David Grossman, Jyoti Chaudhary, of course, Hogan, did I mention that? And also Vladimir as well. He is one of our guy who's an investor who's been one of the superstar invested all across Canada, majority of the property he never saw. I think he have done quite a number of deals with me or with me directly or directly. Might have done maybe 15 or 20 deals altogether, maybe less, maybe more, but a great guy to work with. Anybody have any questions? Anybody like to add a few more things? We got 5 more minutes to wrap it up.
Yeah, I just want to add something. I've got my camera off because I'm driving, but I just wanted to mention when we were talking about crashing, the other thing is that there's developers out there who are not able to finish their projects. And I got a call yesterday from a commercial real estate agent who has a client with a townhouse development in York region that they're not able to complete, looking for somebody to buy it. So if anybody knows anybody who might be interested, I think I don't have too many details yet. I'm supposed to be signing a non-disclosure today still, but the purchase price is somewhere in the $15 million range. So if anybody knows somebody who might be interested in taking over an opportunity like that, please give me a call.
Excellent. Thank you, David. Appreciate that. Well, again, there are a few people, there are a few investors here in this room who are pretty hardcore or they're pretty deep, and that might be in their alley, by the way. We have a lot of developers who are doing right now. One of the best thing right now in Canada, which investors are making a good fortune, is conversion, turning single family into multi-units, up to 6 units, 8 units. And that is the new strategy, which is very powerful. But I do believe that in Edmonton, they have overbuilt. That's what feedback I got, but not all much of the fact and figures though. But in case you are thinking about it, you feel the market is dropping, owner financing is available. One of the best thing you can do for yourself before you get involved in this investment, get your financing in place. If you're going to have a joint venture partner, make sure the money is on the trust account 30 days before closing. And make sure the bank, if you're dealing with the banks, be aware of it. Banks are very, very strict nowadays. And if you're dealing with private lenders, a good mortgage broker, you are good. You're really good at it. I'd like to take one question or one or two questions. Anybody like to ask any question? Or Vladimir, you like to put some final words?
Thank you very much, Uncle. And just share like a great deal what you have for last month, for example.
Well, we have deals in Scarborough. We got 4 properties where you can build 6 units each. To pick up a lot is about 800,000. We are able to pick up for 600,000. So you can build 6 units, and the going price for 2-bedroom is about 900,000 per door, or 600,000 door for 1-bedroom. So the best suggestion for you, if you are going to buy and hold for long-term basis, you can pick up a lot from 600,000 to 1.2 million. Depending upon 6 units and the cost and the construction type and the location, you are looking at a year and a half to complete the whole process, and your net profit could be about 1.2 to 1.5 million, which is not bad. And majority of the money can be borrowed money. And again, the city is giving a green light, no development charges, pretty much fast approval. A lot of no problem with trades or labor or materials altogether. in my opinion, those who are interested in building a long-term, then you can refinancing, pull all the money out, pull all the profit out, non-taxable, and reinvest if you like to. But I would suggest to majority of the investors, if you are in your 30s or 40s, make sure you have one or two small multi-unit buildings. And they give you enough cash flow, give you enough tax benefits. It gives you a cushion, and you have 40, 50-year amortization. You have good cash flow, and you make sure that everything you have a professional management team. You have one of the best CPAs, just like Jerry Hogan. You talk to one of the best mortgage broker, David Grossman. You hire the best lawyer, Jyoti Chaudhary. And of course, if you have a good coach, that's definitely helpful for you. Again, the good money to be made on a very settled manner. Again, you need patience. And there are great deals out there, whether you're in Vancouver, whether you're in Calgary, or whether you're in Halifax. Again, this type of buildings take longer time to build, year and a half, unfortunately, but the profit margin are excellent.
Thank you. Thank you very much.
Okay, time to wrap up. It's 8 o'clock. As we promised, we're going to finish every meeting in time. Thank you, everybody, and good night. And whatever you do, enjoy the beautiful day. And God bless you all.
Thank you
Good night,
so much,
everybody.
Nataj.
Thank you,
Bye,
everybody.
Thanks,
everybody.
Navtesh.
Good
Thanks,
night.
Good night.
Natash. Bye,
Bye,
everyone.
everybody.
Bye-bye.
Bye.
Bye for now.